As economies evolve, so do strategies of wealth. But the principles of old money have withstood the test of time. Old money principles offer a stark contrast to today's quick-rich schemes, presenting a deeper understanding of what it means to be truly wealthy. What sets old money apart in an age of fleeting fortunes? Why does some wealth last for generations while others fade away? Today, we explore the lasting principles of wealth that have sustained families for centuries, and how these timeless strategies contrast with today's economy. In an era when the world was on the brink of an industrial revolution, one family saw an opportunity that others overlooked. It was the late 1800s, and oil was emerging as a commodity that could revolutionize industries. John D. Rockefeller, with his keen business acumen, ventured into this uncharted territory. He founded Standard Oil, a company that would eventually dominate the oil industry. Rockefeller's strategy was not just about extracting oil, it was about controlling the entire supply chain. From drilling to refining, from transport to sales, Standard Oil was omnipresent. This vertical integration was revolutionary. It reduced costs and eliminated competition, setting a blueprint for modern business practices. Today, the Rockefeller's principles of investing in emerging industries are more relevant than ever. In our world, the new oil can be found in technology, renewable energy, and innovative startups. Just like Rockefeller, today's investors are faced with opportunities in uncharted territories. The lesson here is clear. Identifying and investing in emerging industries requires not only vision, but also a willingness to embrace risk and innovate. It's about seeing the potential where others see uncertainty. As we venture into new economic landscapes, the Rockefeller legacy teaches us to think ahead, to be the pioneers of our time. The power and wealth of dynasties were often fortified not just through conquests and trades, but through the strategic unions of marriage. The European aristocracy, in particular, mastered this art, weaving a tapestry of alliances that would extend their influence and secure their fortunes. These alliances were meticulously planned. Marriages were more than social contracts. They were binding agreements that merged wealth, connected powerful families, and often altered the course of history. For old money families, these unions were a critical component of a larger strategy to maintain and grow their wealth. Today, while the practice of strategic marriages in this sense may have diminished, the underlying principle persists in the form of business alliances and partnerships. In the corporate world, mergers and acquisitions, joint ventures, and strategic partnerships are modern equivalents of these age-old alliances. Building and maintaining strategic relationships is essential. Whether it's through family ties in the past or business partnerships in the present, these alliances can open doors to new opportunities, provide access to resources, and create synergies that drive growth and success. In the world of old money, wealth management is more than a practice. It's an art form characterized by a level of discipline and rationality that sets it apart. The Rothschild family, with their vast financial empire, epitomizes this principle of unemotional wealth management. The Rothschilds' approach was methodical and calculated. Their decisions were grounded in thorough research and analysis, free from the sway of fleeting market sentiments or personal emotions. This rational strategy enabled them to build a financial foundation that was both stable and resilient. In today's volatile financial markets, the Rothschilds' unemotional approach to investment is particularly relevant. Modern investors are often tempted by the highs and lows of the market, but success often lies in a balanced, data-driven approach, focusing on long-term goals rather than short-term fluctuation. This principle teaches us the importance of removing emotion from financial decision-making. By basing decisions on solid data, research, and long-term trends, investors can navigate through market turbulence and make choices that align with their long-term financial objectives. As we apply the lessons from the Rothschilds, we learn that wealth is not just built through bold risks or speculative ventures, but through a consistent, level-headed approach to financial management. a timeless strategy for enduring success. Education, in the realm of old money, has always been a gateway to something much larger than just academic prowess. But what hidden advantages does it unlock for those who walk through its doors? It's not just the classrooms or the libraries that hold value in elite educational institutions. There's something else, often unseen, yet pivotal for old money families. These schools are networking gold mines. Here, future leaders and influencers form bonds. The Kennedys, for instance, used these networks as a launchpad to significant political and social influence. When old money families invest in education, they're looking beyond academic achievements. So what's the real treasure they're after? It's social capital. Education is a ticket to influential circles, a strategic investment that goes beyond mere knowledge acquisition, offering a lifetime of opportunities and connections. There's an art practiced within the walls of prestigious schools, one that's crucial for maintaining generational wealth. It's the art of building lifelong alliances. Relationships formed in these institutions often lead to future business partnerships, political support, and social backing, crucial for maintaining and expanding old money legacies. As we reflect on these insights, it becomes clear that education for old money families is a multifaceted tool woven intricately into their tapestry of wealth preservation and growth. It's a lesson for anyone aiming to not just achieve, but to build a network that supports and elevates their ambition. There's a silent force at work in the world of investing, often overlooked yet immensely powerful. It's the magic of compounding. The Rockefellers, Carnegies, and other old money dynasties understood this. By reinvesting earnings, they turned time and interest into their most loyal builders of wealth, exponentially increasing their fortunes. Instead of splurging profits, old money strategically reinvests, allowing their wealth to grow quietly but steadily, harnessing the true power of compounding. Within the circles of old money, wealth is not just about accumulation. It's equally about preservation. The DuPont family, with their multi-generational legacy, stands as a testament to this principle. They didn't just build their wealth, they meticulously safeguarded it. Diversification across industries, from gunpowder manufacturing to chemicals and beyond, was their shield against market volatilities and economic downturns. In the contemporary financial landscape, this principle of asset preservation is more crucial than ever. With market uncertainties and economic fluctuations, modern investors are adopting similar strategies. Diversification across asset classes, from stocks and bonds to real estate and emerging technologies, is a common approach to safeguard wealth. Historically, old money families like the Vanderbilts and the Rothschilds leveraged their social networks to gain business insights and access to exclusive investment opportunities. They understood that social capital could be just as valuable as financial capital in building and sustaining wealth. Informational leverage was another key aspect. By having access to information others didn't, whether through political connections or private networks, these families could make informed decisions, often staying ahead of market trends. Reputational leverage was equally important. A trusted name could open doors, secure deals, and attract partners. The prestige associated with these families often acted as a catalyst for further wealth accumulation. In the modern era, leverage takes on new dimensions with digital technology. Today's investors use online platforms and social media for market insights and leverage advanced financial tools for investment decision-making. However, the essence remains the same, using all available resources to maximize potential. This perspective on leverage teaches us that wealth creation is not just about how much capital one can invest, but also about how effectively one can use their broader assets. Old money families, with their timeless wisdom, recognized early the value of spreading their assets across various geographies and sectors. A prime example is the British aristocracy's investment in colonial enterprises. They diversified their holdings by investing in colonies around the world, which, despite the controversial nature of colonization, brought significant wealth back to the UK. This strategy of geographical diversification provided a hedge against local economic downturns and political upheavals. The Rockefeller family also exemplified strategic global investment. Beyond their American oil ventures, they expanded into Latin America, Asia, and Europe, seeking opportunities in diverse markets. This not only multiplied their wealth, but also buffered it against the volatility of the American market. The old money approach to strategic global investments teaches us a valuable lesson. Diversification is key, not just in asset types, but also in geographical locations. By casting a wide net, investors can protect their assets from localized risks while tapping into growth opportunities on a global scale. As you reflect on these lessons, consider how they can be woven into your own financial story. The journey of wealth is not just about the destination, but about the legacy we create and the impact we leave behind. May the insights from the past illuminate your path to financial prosperity and wisdom.